You ever wonder what it would be like to get paid every single week just for holding a few smart investments? Imagine checking your account every Friday and seeing fresh dividend income rolling in. No clocking in, no boss breathing down your neck, just weekly cash flow on autopilot. Sounds like a dream, right? Well, it's not. It's possible with the right high-yield weekly paying dividend ETFs. Now, let's be clear. Weekly dividend ETFs aren't as common as monthly or quarterly ones, but they do exist, and some of them are absolute gems. We're going to break down exactly how they work, which ones are worth looking at in 2025, and how much income you can actually make from them. So, let's get into it. First off, what even is a weekly dividend ETF? Most people are familiar with stocks or ETFs that pay out dividends every quarter. Some pay monthly, but a few rare funds go the extra step and break those payments into weekly chunks. Technically, these funds still collect dividends monthly or quarterly from their underlying holdings, but they distribute them to shareholders weekly to create that smooth, steady income stream. Now, why would anyone want that? Two reasons. First, cash flow. Weekly payouts are perfect for retirees, side hustlers, or anyone trying to replace a paycheck. And second, reinvestment opportunities. When you're getting paid every week, you can reinvest those dividends faster and compound more aggressively. All right, so which ETFs are actually paying weekly dividends? Let's start with one that's been getting a lot of attention lately. MSTY, the Global XS&P 500 Covered Call ETF. This fund is designed to generate high income by selling covered call options on S&P 500 stocks. In plain English, it collects premiums for giving up some upside in exchange for steady income. And MSTY does something interesting. It distributes income weekly. As of now, MSTY is yielding around 12.5% annually, and with its structure, you're getting cash in your account every Friday like clockwork. That's $125 per year for every $1,000 invested. Want $500 a month? You'd need to park about $48,000 in MSTY and boom, you've got a mini paycheck. Next up is JEPI, the JP Morgan Equity Premium Income ETF. Now, JEPI doesn't technically pay dividends weekly, it's monthly, but we're including it here because a lot of people pair weekly and monthly dividend ETFs to smooth out income throughout the month. JEPI is hugely popular, with over $30 billion in assets. Its strategy is similar to MSTY, selling options for premium income, and it yields around 7% to 10% depending on market conditions. Combine JEPI with a weekly pair like MSTY, and you've got income hitting your account nearly every week. Let's look at another unique one. DIVO, the Amplify CWP Enhanced Dividend Income ETF. DIVO is an actively managed fund that holds high-quality blue-chip companies like Microsoft and Visa and sells calls on them for extra income. Again, it's monthly in terms of payout, but the fund's holdings are very dividend-focused, and its yield sits around 5% to 6%, with less volatility than something like MSTY. Pairing DIVO with MSTY gives you a 1-2 punch: reliable stocks with income and weekly payouts from options. Okay, let's pivot to a lesser-known ETF, NUSI, the Nationwide Risk Managed Income ETF. This one's got a different strategy. It owns the NASDAQ 100 and buys protective puts to limit downside risk. Then it sells covered calls to generate income. NUSI's yield is around 7% to 8%, but it's the smoother ride during volatile markets that makes it attractive. It pays monthly, but again, we're building an income ladder by stacking funds with different payout dates. With NUSI, you're buying protection and consistent income, which is a rare combo. Now, here's where things get spicy. There's an ETF called QYLD, the Global X NASDAQ 100, Covered Call ETF. This fund is famous, or infamous, for its sky-high dividend yields. We're talking 12% to 13% in some years. QYLD owns the NASDAQ 100 and writes covered calls on the entire index. It pays dividends monthly, but because the payouts are so consistent, you can schedule your distributions to feel almost weekly. People love QYLD because of its predictable, rich income. But just know, you're giving up a lot of upside since the fund caps your gains through those calls. Let's pause for a second. You might be wondering, okay, these ETFs are great, but how do I actually build a weekly income plan from them? Easy. Here's a quick income ladder. Week 1, MSTY. Week 2, QYLD. Week 3, JEPI. Week 4, DIVO or NUSI. You rotate between weekly and monthly payers that stagger their distribution dates. By owning 3 or 4 funds that pay at different times, you create the illusion of weekly income, even if each fund pays monthly. Now let's talk numbers. Say you want to earn $1,000 a month, or roughly $250 a week. Here's how much you'd need to invest in these ETFs based on current yields. MSTY at 12.5%, $96,000. QYLD at 12%, about $100,000. JEPI at 8%, $150,000. DIVO at 6%, around $200,000. Of course, you can mix and match. For example, $25,000 in MSTY, $25,000 in QYLD, and $50,000 in JEPI would get you about $800 per month in income, or nearly $200 per week. And all of this comes without you having to sell a single share. Now let's get real. These ETFs aren't magic money machines. The high yields come with trade-offs. Funds like QYLD and MSTY sacrifice capital appreciation. In bull markets, you may underperform the broader index, and option-based ETFs often struggle during fast-rising markets. That's why balance is key. If you're young and growth-focused, you probably don't want to go 100% income. But if you're building a cash flow machine or aiming for early retirement, a chunk of your portfolio in these high-yield ETFs can be a game changer. Bottom line? Weekly paying ETFs are rare, but by combining a few smart funds with staggered payout dates, you can build a reliable, steady stream of cash flow that shows up like a paycheck every single week. No office, no manager. Just you and your money doing the work. If you enjoyed this breakdown and want more unfiltered ETF strategies, hit that like button and subscribe to MoneyStick Unfiltered. Catch you in the next one.